Trading the Yen by www.forexconspiracyreport.com. Trading the yen has for years simply been a matter of buying yen with dollars, waiting a bit for the dollar to fall, and then buying back dollars for a profit. Trading the yen may not be that way anymore. An interesting article in the online Wall Street Journal notes that the dollar rises against the yen as well as the euro as economic recovery proceeds in the USA, while it falters in Japan and the European Union. The dollar gained against the yen and euro as economic and policy news abroad underscored a divergence between recovery in the USA and struggles in Japan and the eurozone. The dollar rose 0.3% against the yen to 116.56 yen, near its highest level in more than 7 years. The euro fell 0.6% versus the dollar to $1.2451, hovering near its weakest level since August 2012. Japan's economy slipped into recession in the third quarter. Its gross domestic product contracted an annualized 1.6% in the 3 months ended September 30th, far short of economists' forecasts for a 2.25% expansion. In trading the yen, it appears that for the time being, it is not simply a matter of buying the currency and waiting for the dollar to weaken. But Japan has not given up either. The most recent recession in Japan came on the heels of a sales tax. Prime Minister Abe is going to delay a scheduled increase in the tax, which will at least keep the recession from getting worse. Good times in the USA. The USA has recently seen the longest period of sustained job growth since the days following the Second World War. The oil and natural gas fracking boom has reduced the cost of home heating and driving your car. There will be more money in everyone's pocket this coming holiday season, and the economic recovery is likely to continue. So it is not just a matter of troubles in Japan that drive down the yen. Rather, a strong U.S. economy is important as well in trading the yen. And remember that forex markets were set up to foster world trade. How will the Japanese recession affect the USA? According to an article in USA Today, it will not do so directly, but concerns about a global economic slowdown are of concern to the greenback. Japan's unexpected slide back into recession is likely to have little impact on U.S. economic growth, but adds to worries about the slowing global economy, analysts say. Just 4.1% of U.S. exports go to Japan, and those account for 1% of U.S. gross domestic product, according to the Office of the U.S. Trade Representative and IHS Global Insight. Also, the falling value of the yen against the dollar, which makes Japanese imports less expensive in the U.S., is a plus for consumers. Because one trades the yen against the dollar, there is no profit to be made if they strengthen or weaken together. Trading the yen against any other currency is only profitable if the two diverge in strength. The strongest factor in this equation is the fact that the U.S. is a major oil producer as well as consumer, and Japan is simply an oil consumer. In fact, Japan may soon be receiving oil and natural gas from the USA by way of the enlarged Panama Canal. In the meantime, technical analysis of forex currencies is probably the best bet for making a profit trading the yen. For more insights and useful information about forex and forex trading, visit www.forexconspiracyreport.com.